What's going on, everyone? We got to talk about the real reason why Bitcoin has crashed. And a lot of people are saying that it's because of this ETF thing, and it's not what you think it is. So, we're going to talk about that. Remember, I'm not a financial advisor, none of this financial advice. Let's get straight into it. But let's talk about what's really going on with Bitcoin. So, as you can see here, like the Bitcoin price went really, really low, right? It went all the way from 45K all the way down here to about 41K, was there very briefly, and then it went back up to where it is now, which is at 43K. And if we look at the 15-minute chart here, you can see all the way where it went down. Like, this is kind of crazy. Like, we were all the way at 45.4K, we went all the way down to 41.5K. That's absolutely insane. That's 4K all the way down the drain. But we're kind of recovering right now because people are seeing everything's not what it seems. And we might have a little bit more of a drop to go, because as you can see here with the momentum wave bands, we're now hitting the top of these momentum wave bands, and typically we have a pullback after that. And when you also look over here at the RSI, you can also see we just crossed at the top there and we're pulling back again. So we could be pulling back down to low 40K areas. So we might be getting that 38K, 40K discount price that we were talking about in the previous video. Now, I did mention we could go up to 52K before that, but nobody could have predicted what just now happened. What just now happened was a freak thing that happened, but I think it was actually planned, and we're going to talk about that. And you can see this has affected the whole entire market. It hasn't only affected Bitcoin, it has literally affected everything. So what we're going to be looking at here is this article by Cointelegraph. Now, they mentioned a bunch of stuff. We're not going to read all the fluff that they have in here, but we're just going to look at the important stuff here, right? Someone said, as an ETF would it certainly enable crypto overall to take off, and based on Gensler's comments in 2023, he still sees the industry in need of more stringent compliance. Now, what I really want to say here is Gary Gensler is the most hated person in the crypto world, right? So when he says something, nobody really takes it seriously in crypto because it's Gary Gensler. Like, come on, like nobody takes anything he says about crypto seriously. It's like your grandpa trying to tell you how to buy Bitcoin, or your grandpa trying to tell you, Bitcoin's not what you want to put your money in. You want to put your money in bonds. But really, this is where the new age is going. Like, it's going towards Bitcoin, right? And Gary Gensler, he's still left in the past, right? But anyways, it says, from a political perspective, there is no reason to approve a Bitcoin spot ETF that would legitimize Bitcoin as an alternative store of value. This is pretty much what he's saying. Now, his words have no weight over crypto. Like, he's I don't even want to talk about him right now, right? Because he has nothing to do with crypto. Now, what we really want to look at here, it says the official window for the SEC to approve it begins on January 4th and lasts through January 10th. So from January 4th to January 10th is going to be the important days you want to pay attention to. There's a reason why you're seeing this drop coming on the 3rd before this big event, right? And that is because the big money, the institutional investors, the big money that has all the money on Wall Street, BlackRock, Blackstone, all of them, they are the ones controlling what's happening right now. See, everybody was opening up long positions. And what they seen was, since everyone is opening long positions, why don't we do a long squeeze? Because we know, since they're opening long positions, if we short the market, we're going to make that price drop, and we have more money than them. So if we sell and we also short the market and we have more money than them, we can overtake their positions, and they lose money and their money goes into our pockets. And that's exactly what they're doing here, because they're operating smart here. See, when everyone's doing something, you don't want to do what everyone's doing. When the rich people do something, they do the opposite of what everybody else is doing, is because everybody else is poor. So what they're doing is the complete opposite of what you're doing. You want to long the market because everybody's longing the market. You want to long the market because that's the obvious thing to do. Prices are going up. We know this is going to be the bull run. So the smart thing to do, quote unquote smart thing, is to long the market. But what you don't understand is that's the smart thing for broke people to do. But the smart thing for rich people to do is go against what all the broke people are doing. The broke people are smart and they're right. And they know that we're going to be in a bull market. Like, the broke people aren't just dumb. They know, like, this is how we're going to get rich. But what the broke people do not understand is the rich people know exactly what you're doing. They know your psychology. So what they're going to do is short the market as you're longing it because their money is more powerful than yours. So this is exactly what's happening here inside of the crypto market. So this is from the Wolf of All Streets, Scott Melker. He says, this is the reason for the dump. I put reasons in quotes because this is really just a leverage flush. Regardless, this is an opinion with zero new information that flies in the face of everything shared by experts. Are you guys that skittish? Now, pretty much what he's explaining here is kind of what I explained. And we can read a little bit of it. We're not going to read all of it because I think some of it is fluff and you really only need a few sentences out of this whole thing, right? But what he pretty much says is Matrix on target has been bullish against consensus expectations in 2023 and predicted early in the year that Bitcoin could reach 45K by Christmas, blah, 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 50K by the end of 2024. So what he's saying down here is if there is any denial by the SEC, we could see cascading liquidations as we expect most of the 5.1 billion to go long pretty much. And the problem with this is they knew exactly what's going to happen. So right before it happens, they short because they know if the SEC doesn't approve it, then what's going to happen? The prices are going to drop and everybody's longs are going to be worthless. So they were like, we could either wait till that and roll the dice on a 50-50, observation here, or what we can do is what they just now did. We can open shorts before this even happens. So then we can take their long positions and steal their money. Not steal their money, but we can earn their money. We can trade against their money. Their money is tiny compared to ours, which is what the rich people are saying. Like, my money's tiny compared to theirs. But what the rich people are pretty much saying is like, look, we're just going to overtake their positions. We're going to do a long squeeze. We're going to go ahead. We're just going to liquidate them, right? We're just going to drop the prices. So all these long position people are getting liquidated and we take all their money. So that's pretty much what they just now did. And yeah, this is pretty much what's happening here. Now, there's some more stuff that you really want to look at here. This is by another person here. He says, I know people are desperate for a narrative, but Bitcoin didn't sell off because of some silly report about ETF denial. Like, that's true. Like, all it was is Gary Gensler and other people saying, oh, it's not going to get approved. It's not going to get approved. This is pure speculation. Like, smart money is not moving their money based off of pure speculation. And then someone else says it's sold off because nothing goes straight up, which is a fact. And it's an easy grab for liquidity to do a long squeeze. In short, the market was overbought. I've been saying this for the longest time. This market is overbought. Like, I don't know why people just weren't listening. But if you really look at what's been going on here with the market, we've been going for a year straight without a major pullback. Let me say that again. We've been going for 1 full year without a major pullback. The biggest pullback that we had was right here when we went from 31K to 26K, or actually 25K. That's not a major pullback. That's not a major pullback at all. So we've been going this whole time without a major pullback. Now, it could still possibly get to 52K before that major pullback happens, because this is not a major pullback either. This is a drop in the bucket. This is not a major pullback whatsoever. A major pullback is just going back down to 30K, which is pretty much what I'm predicting after we get to 52K. There's still a huge possibility that we get to 52K and possibly 60K. And if we do that, that's when we see the major drop going down to 30K, right? And we have not seen that major drop yet. So this is really hard to tell. It's hard to tell if we're just going to, drop all the way down to 30K from here. It's hard to tell if we're going to drop all the way down to 38K or stop at 40K. And it's also hard to tell if we're even going to go up to 52K before we have the major drop, or if we're going to keep going past 52K all the way up to 60K before the major drop. But one thing I do know for sure is we will have a major drop, whether we go up to 52K and go down to 30K, or whether we go up to 60K and go down to 30K, whether we only go to 46K like we did before and drop down to 38K, or whether we do what we did just now and go maybe a little bit further down to 40K. What we do know is that there is going to be a major drop. So that's what you really got to prepare for. And the best thing to do in situations like this is just dollar cost average, because you really don't know what's going to happen at this point. But you do know there's going to be a major drop. So if the major drop comes premature, now you're prepared, because now you can buy when it drops at the bottom. If it doesn't and it goes up to 52K to 60K, now you know you can sell your position. So then when it drops, you can put all of your capital in at the bottom, and then you can watch it rise. And if it goes a little bit lower than what you expected, you can dollar cost average. And now you have an average cost of 30K, 38K, 35K, rather than having an average cost of 50K. And that's what you want when you're looking at this. You got to always think about your P&L. So you don't ever want to be over leveraged inside of this game. Like, you don't want to buy all in at 45K, because now if it goes to 30K, now your average cost is 45K. So now you're down a lot of money, 15K, and like that's just not nice. So you definitely want to pay attention to what's going on right now. So yeah, anyways, they say we could see Bitcoin prices declining by negative 20% very quickly and falling back to 36 to 38K range. As Cointelegraph reported, downside targets had already put the mid to low 30K range as a popular floor. I've put this as a popular floor without even looking at their analysts, right? I'm only looking at this article now just to kind of show you guys exactly what I've been saying for the longest time. But this is pretty much set in stone. Whether it goes down there now or it waits and goes up to 52K and does like a little bear trap, like it could do either one of those. That's why the best thing that you could do at this moment would be the dollar cost average in as we go lower. And if we do go higher to 52K to 60K, then you could sell your position and ride that all the way down. So that's pretty much the analysis there. And looking at the prices here with Bitcoin, it does look like we could pull back down a little bit more, because as you can see here with the RSI, it's not done yet. A lot of times when the RSI gets all the way down here, it crosses, it goes up just a little bit, but then it goes back down again. Kind of like how we did back here and back here. So what I'm expecting here is probably a little bit more of a drop here for the price of Bitcoin. Probably going down to 41K, or maybe even going down to 40K, possibly even 38K at the bottom of that Fibonacci retracement and at the bottom of that momentum wave band. So yeah, this is pretty much all I got for you all today. Remember, I'm not a financial advisor. None of this is financial advice. Definitely check out the link in the description for the chart prime indicators that I'm using here. And as always, I'll be back with another video.